Welcome to Markets Now. I'm Michelle Rook with Garrett Toay of AgTraderTalk, and we ended with green on the board at both grain and livestock futures trade on Friday. And Garrett, higher close on Friday, as I mentioned, but we had mostly higher weekly closes in the grains. Is the market seeing fun buying, or are we putting weather premium in finally?
Yeah, I don't know. I don't think we've put weather premium yet into this market. I think what you're seeing potentially, especially with the higher weekly closes, that those who are pressing shorts don't want to press shorts at these levels and try to see how far things will go down, especially when we're kind of getting into a key period over the next 2 to 3 weeks where weather becomes more important. We may be seeing some potential weather changes between the European and the GFS model. There's enough uncertainty out here until maybe some clarification on the stocks report and the acreage report at the end of the month. It's just, shorts just don't want to press at these levels. It's the 6th of June, as of publication. We have a lot of the growing season still to go.
That's right. So how much weather premium do you think we need to be putting into these markets at this point?
Well, the April high was 470, which is the crop insurance price. And historically, this is, I think, the first year in ever that we haven't traded above the spring crop insurance price. But we do also have a downtrending trend line off that. So, boy, it'd be nice to get back to that 470 level. That would mean that we have broken that downtrend. But the charts kind of look at that, 460, 465 area as far as upside. It really, as far as how much weather premium we put in this market, that's a $64,000 question. The market's 100,000 contracts short in corn. It's a function of those guys. The longs are kind of out of the market. Last week we were under pressure because we lost a tender to Taiwan to South America. This week we actually did some July-August business to South Korea. So the market's kind of getting some mixed messages as far as demand is concerned. As long as we can stay competitive, it still seems like the South American crop is growing. Their prices have come under pressure here. So that'll obviously provide some headwinds out in the near term. But, like I said, we just don't want to press at these levels to the downside.
So Garrett, you're a technician. When you look at corn and soybean charts, we continue to kind of keep coiling here, don't we?
Consolidating, this is just kind of life. We're just kind of floating right now. We're directionless, kind of boring trade. We have potential here if weather, it's just that time of year. Mid-June is when seasonalities kind of build in here. Mid-June, late July, early July is when we start getting weather. So I do think that we're going to get a chance here that maybe get things excited to provide some opportunities, which would be great because the last month, it's like the clothes washer repairman here.
That's right. You mentioned demand, and of course, there is some uncertainty there with trade deals maybe down the road a little ways. Is the market starting to get more hopeful about some of these trade deals getting close, or is the market tired?
The market is, I had an old broker friend when I first started the business. He'd stare at his computer screen and he's like, I'm just catatonic right now. We're catatonic. We want to see some progress. And I think it's more tied to soybeans than it is to corn. The soybeans, I think, we're set up on a T that, we have a pretty inflated USDA yield here. We have reduced acres. Unless the USDA shows us bigger acres at the end of the month, that maybe take some of the bloom off of this supply issue. I think that the beans could have some more potential if we weren't still in a quagmire with a trade war with China, and if we had some more direction on renewables, because that impacts both demand items of crush and exports. So we would really, really like to see some progress here. I mean, case in point, new crop balance sheet spreads, soybean spreads traded new contract lows this week. Flat prices sitting here at 10.25 to 10.50, those areas, but the spreads are all widening out. It's very early for that to be happening at this, the first week of June it's unheard of. But here we are. So, the market may be growing impatient, but it just handcuffs everybody from doing anything.
That's right. So the fact that the bean market did kind of perk up here at the end of the week, was that because of maybe a little bit of hope about President Xi and President Trump talking, maybe some talks resuming or not?
Yeah, we did have the phone call that provided some support midweek, but at the end of the day, both sides are kind of downplaying any sort of significant developments. I mean, even President Trump said that we've got a lot of things to work through, et cetera, et cetera. I did see that they are trying to allow some rare earth, or they allowed like six plants to export rare earths to U.S. automakers, the big three automakers. Maybe that's an olive branch, but I think we're still kind of in the getting to know you phase of negotiations rather than any actual, point where we're going to start signing things in ink. So I think the big part though is that South American soybean premiums have firmed up here a little bit. U.S. is actually fairly competitive for into July, August timeframes. We haven't necessarily seen it reflected in U.S. basis values because it feels like the commercial ownership is pretty decent, but these South American values are firming.
This isn't necessarily true for corn, though, is it? South America is undercutting us right now, aren't they, in the corn market?
Last week they definitely were. They are seeing some firming as well. They just haven't had enough harvest pressure come in. I think it's just a matter of time. Kind of case in point, is interesting. If you look at Mato Grosso interior corn prices, they tanked right about April 19th. And everyone seems to, on Twitter and everywhere else on social media, talking about corn spreads and old crop corn spreads. Old crop, new crop corn spreads here on the Board of Trade fell out of bed a week later. So obviously it feels like South America or Brazil is driving the boat here, especially as far as exports for July, August, September timeframe.
And all-time highs in cash cattle and futures on Friday. Can we keep going, do you think?
We're finally, I think, seeing convergence between futures and cash. We had 240 trade, I think I'd seen out here. There's no cattle out there, and it's a function of when does the consumer balk. I think what you're seeing in the rest of the protein markets is potentially you're seeing some of that shift happen. We had new contract highs in hogs this week. That's something to watch. If hog prices start rallying because we're shifting demand to other proteins. But right now, I mean, this is a market that we have really never experienced before in our lives. It's the equivalence of the $18 beans and $10 corn type situation. So right now, I mean, it's cash is driving, and that's exactly if you're bullish out here, what you want to see. But when the music stops, it stops.
And hogs, you mentioned it, new contract highs in the back months. The front months over 100, I think over 107 in the August contract. What about hogs? Can they keep going here, pushed by cash and cutout values too?
It really is. I mean, we're getting the summer grilling season, and it is. It's the old adage that we use with crude, the rising tide lifts all ships. Well, the rising tide is cattle, is fat cattle in cash cattle. So, you look at these charts, they look constructive. New contract highs, how can they not be constructive? So I think that you probably do see some money flows because you're starting to see cattle prices, talked about in non-ag media circles. So it's drawing attention, and it might see some additional money in.
Okay, thanks so much for joining us. That is Garrett Toay, AgTrader Talk.